Welcome back. In this video, I will share with you my thoughts on the best stocks to buy and own in 2023. As always, this is not financial advice. I will focus on three different types of stocks that I believe should be bought and owned this year. The focus will be on quality companies. The first two types of stocks should perform well even in the current market environment with high inflation, high interest rates, a weakened economy, and a possible recession coming. The last type of stocks will not perform as well in this market environment, but that means that they can be bought for cheap, which is exactly why I have included them as well. So let's jump into it. The first type of stocks I recommend to buy and own in 2023 are luxury goods stocks. Despite global economic uncertainty, the luxury market is predicted to keep growing until the end of the decade. The management consulting firm Bain & Co. reported that 95% of luxury brands would achieve positive sales growth in 2022, regardless of the pandemic restrictions and the rise in inflation and cost of living pressures. They also said that the luxury market this year will be more resilient to recession than in 2008, especially if China's COVID restrictions ease. In addition, luxury good companies tend to have high profit margins, and the demand for luxury goods is relatively inelastic. This means that during a recession, consumers may be less willing to spend money on necessities, but may still be willing to purchase luxury goods items. This is evident with Moet Hennessy CEO saying that the group was running out of stock of champagne in the lead up to Christmas in 2022. And the group is also saying that its wine and spirit divisions had seen sales in Europe, the US, and Japan rise sharply since the start of 2022. Furthermore, evidence shows that the luxury goods market is not directly correlated to the general economy. Luxury is not a proxy for the general economy, because luxury brands sell to affluent people who have their own behavior, which is not necessarily totally aligned with economics. Therefore, luxury good companies can boost their prices without hurting demand, as we can see from Hermès International, who reported a 24% growth in 2022 and are saying they will hike their prices as much as 10% in 2023. Another good example of this is Rolls-Royce, who just reported that they sold a record number of cars in 2022, driven by demand in the US, their biggest market. The company sold over 6,000 cars, an 8% increase from the previous year, and they expect to post record profits when they release their financials later in a few weeks. This achievement highlights the resilience of luxury goods market in the increasing demand for luxury items, even in times of economic turmoil. Overall, luxury good companies are well positioned to weather the storm and even come out ahead during a possible recession, making them a good stock to invest in right now. Some names to investigate further are LVMH, Hermès, Moncler, and Ferrari. The next type of stocks that I believe should be bought and owned in 2023 are shipping stocks, in particular dry bulk shipping stocks and oil tankers. So shipping is another very interesting sector, one that I believe that too many investors overlook. It can be difficult to understand it if you're not familiar with the industry, but within it lies many good investment opportunities. I think 2023 will be another great year for shipping stocks, but of course it's important to choose the right ones. First of all, I'm still very bullish on oil tanker stocks. I created an in-depth analysis on these a few months ago, and all the points I made in that video are still valid. I will try to put a link somewhere here, but you can also find a video on my channel, and I recommend you go check it out. Oil tankers make up one of the largest holdings in my portfolio, and I believe that they will outperform the general market this year as well. I would buy them on any dip that occurs in the near future, and names to look for include Frontline, TK Tankers, and Torm. Secondly, I think dry bulk stocks will have a comeback year in 2023. Dry bulk are ships that carry materials such as iron ore and coal. 2021 was a strong year for the dry bulk shipping market. This was due in part to China exiting the early stages of the pandemic before the rest of the world, as well as a surge in commodity prices and port congestion. However, when China went back to lockdown in April 2022, the market took a downturn and has been flat ever since. The thesis for improvement in the dry bulk shipping market is centered on China's reopening, which is expected to serve as a catalyst for recovery. Despite recent reports of rising infection numbers, the overall trend is towards normalization. This is expected to lead to an improvement of rates throughout the year, and even stronger rates in 2024 and 2025. Even though a possible recession in Western countries would be bad for dry bulk demand, China's reopening should counter this, as over 50% of dry bulk trade is to China. Another factor that could support the dry bulk shipping market is the current state of the order book for new ships. At around 7% of the global fleet, it is at the lowest level since the early 90s, and there is still free capacity at shipyards to accept new orders in the coming years. This suggests that there may be a shortage of supply in the future, which could drive up the rates as well. At the moment, as I said, the rates are very weak. It will take some time for the market to recover, even if China completely opened up today, because in the beginning they would probably go through a phase with a lot of infections and lower demand before everything normalizes again and demand picks up. However, several of the dry bulk shipping companies have a strong balance sheet and an ongoing dividend program, which can provide some stability for investors during this waiting period. Overall, I think now is the right time to take a position in dry bulk stocks and hold through the year. China's reopening and historically low order book are all expected to contribute to a longer and higher market cycle for dry bulk shipping. My favorite companies in this sector are 2020 Bulkers, Golden Ocean, and Star Bulk. Lastly, I find stocks of tech companies interesting, especially the ones that have been heavily oversold. Several really solid companies with a good product, service, and business, such as Meta and AMD, have been absolutely wrecked. After everything that happened in 2022, these companies have seen their share price fall as much as 50 to 60%, which is actually pretty insane considering the size of these companies. The current market environment certainly isn't good for these type of companies, and I'm not expecting them to regain all their losses this year. It might get even uglier if the interest rates keep going up or if there is a nasty recession. My point is that this should be viewed as a great buying opportunity, and exactly why I have included these stocks on my buy list for 2023. It is important to remember as an investor to have a long-term outlook. Therefore, you shouldn't only buy stocks that you think will perform great in the short term, but also the ones that look unattractive at the moment, but could be a bargain and lead to great gains in the future. Remember, you can't always buy what everyone else is buying. When the stock is absolutely hated by everyone, that's usually when you should buy the stock. But remember, it has to be a solid company, and the main reason for the overselling should be market pessimism and not some major flaw in the company, because obviously that is a different story and it might never regain its losses. Like I mentioned, I think Meta and AMDs are great examples of these type of companies, and I will watch them closely during this year. Netflix and Nvidia could be good as well, and even Amazon is likely a good buy, especially if there's another leg down coming later in the year. Remember, the losers of today are often the winners of tomorrow. So please keep this in mind this year and look for some great buying opportunities. But again, there's no rush. You don't need to buy tech companies right now, but have them on your watch list. And if it gets really nasty later in the year, please be ready to buy. Don't be afraid of pulling the trigger. That's my 3 favorite types of stocks for this year. If you like this video, please leave a thumbs up and consider subscribing. Also, please comment down below what type of stocks you will be buying this year. See you in the next video.